Good morning, dear students.
Good morning.
Morning, sir. Morning.
Very good morning, sir.
Good morning. So today is our last session for this topic of mutual funds. We'll be completing this topic of mutual funds. We have come a long way ahead, right from capital budgeting till mutual funds. We'll be doing some really interesting questions today in this mutual funds. Some of them are going to be, of higher standards when it comes to application based and also analytical skills. So let me just take up the question number. Question number 13, guys. Let's look at this question 13. It's really interesting question. Okay. Mr. X on 1/7/2007, during the initial offer of some mutual fund, invested in 10,000 units, having a face value of ₹10 for each unit. So Mr. X on 1/7/2007, during the initial offer of some mutual fund, invested 10,000 units, having a face value of ₹10 each unit. On 31st March 2008, the dividend paid by mutual fund was 10%, and Mr. X found that his annualized yield was 153.33%. So at that time, the annualized yield was 153.33%. Okay. On 31st March 2009, 20% dividend was given. And then on 31st March 2010, Mr. X redeemed all his balance units, which is balance units is what? 11,296. So you can see when we started, we had invested how much? 10,000 units. At the start, it was 10,000 units. But when we are redeeming, it is 11,296. So how come this number of units have increased?
Sir, he is not received the dividend and appreciation. He converted that into the unit.
Can I say the company, the mutual fund has not given out cash dividend, but it has given dividend by way of additional units, right? Okay. So when he sold his units, his annualized yield was 73.52. And then we have to get the NAV on 2008, 9 and 10 values. Okay. So let me just write down the data with the proper information, right? With the proper format, so that it will be easy for us to, compile it. So date, units, NAV on that date, right? And dividend that they have provided on that date, and the annualized yield. So date, units, NAV, dividend, and annualized yield. So first on 1/7/2007, 1st July 2007, we invested in 10,000 units at an NAV of 0. There was no dividend and no annualized yield applicable. On 31st March 2008, we don't know what is the number of units that we have. We even don't know what is the NAV, right? But we know that the dividend that was declared is 10%. At that time, the annualized yield was 153.33%. Okay. Then on 31st March 2009, we don't know what is the number of units, NAV is also not known to us. But we know that dividend is 20%, right? And again, annualized yield is something which we don't know. Then on 31st of March 2010, we sold like 11,296.11 units. Again, we don't know what is the NAV. Again, I mean, there was dividend which was not provided. There's no dividend applicable. But at that time, when we sold it, we earned an annualized yield of 73.52%. Right? So this is the data that we have, and what we need to calculate over here is NAV as on this date. Right? So we can definitely say, since the number of units have increased, it means the dividends have been given to the investor in the form of new units. Right? So we can say, since number of units have increased, so we can say, since the number of units have increased, dividends have been, since the number of units have increased, dividends have been paid by new units. Okay, so let's do the calculation year by year. So as on 31st March 2008, when your annualized yield was 153.33%. At that time, we know the dividend percentage is 10%. But can we calculate the amount of dividend? What will be the amount of dividend, guys? As on 31st March 2008, what will be the amount of dividend that we can calculate?
Sure.
It's obviously 10,000 units.
10,000.
And on that, we have a face value of 10 into 10%.
10,000.
Into 10 into 10%.
Yeah, so 10,000 into 10 into 10%. So how much is it?
10,000.
10,000.
Rupees 10,000, right? So dividend is rupees 10,000. Now the problem is, we know that this 10,000 is not paid to us by way of cash, right? In fact, this 10,000, and this is not paid by way of cash, but this is paid to us by way of additional units. Now, to know what is the number of units that have been paid to us, we need to know what is the NAV on that date, which we are not knowing. But we know that there's an annualized yield of 153.33%. So using that annualized yield fundamental, we can actually calculate the NAV. Right? We can actually calculate the NAV on the end of the year. Okay. So we can calculate the value of our investment, and we can calculate the value of our investment or NAV of our investment by simply looking at the annualized yield. So how do we calculate the annualized yield, guys? Annualized yield.
NAV 1 minus NAV 0 plus dividend plus capital appreciation.
So NAV 1 minus NAV 0 plus the distributions or the dividend, right?
Yes, sir. Distribution divided by NAV 0.
But I need to adjust it for time period also, right?
Yes, sir.
Because since it's annualized yield, and here we are talking of a time period from 1/7/2007 to 31st March 2008.
This for
1/7/2007 to 31st March 2008. So what is the time period? How many months?
It's a whole year, sir.
9 months.
No, it's not whole year. 9 months, right?
9 months.
So into 12 by 9 needs to be adjusted because this is the return that we have got for 9 months, and I want the number to be annualized. Got it? Yes, sir. So
Okay.
153.3.
I thought that it's 31st 7. He's 31st 3.
Yeah, 31st March. It's 31st
Yeah.
March.
Yeah, it's my reading fault. It's look like a 7 actually.
Mhm. Okay. So 153.33% is equal to, we don't know what is the NAV as on this date, minus NAV at the start is 10, plus the dividend that we are having on a per share basis, per unit basis. Can I say 1 rupee? Right?
Yes.
Right. So 1 rupee is the dividend. Upon NAV at the start was 10 into 12 by 9. So can you just solve this and give me the value of NAV1, guys? Let's solve this and give me the value of NAV as on the end of the year. Are you able to solve it or no? This will be 153.33% into 10 into 9 is equal to NAV1 minus 10 plus 1 into 12. In fact, I can take this 12 also on this side. So this is what? 10 into 9 divided by 12 into 153.33%. This is 11.4998 is equal to NAV1
Sir,
minus 10 plus 1.
0.433.
So this is going to be plus 10 and minus 1. So 11.4998 plus 10 minus 1, which is 20.4998 or 20.50 we can say. Right, so NAV is going to be 20.5. Yeah. Did we get this? Did you get this, guys? NAV 20.5. Yep. Are we getting this NAV 20.5,
Yes.
everyone? Yeah.
Yes.
Yes, sir.
Yes.
So the first part, this 20.5 is done, but we also need to know the number of units. Sir, why? Because based on this number of units, your dividend is going to be decided for the next year. So the number of units that have been allotted to us, units allotted as dividend, needs to be calculated. Units allotted as dividend is going to be 10,000 rupee divided by 20.5. So how much is this? 10,000 divided by 20.5, which is 487.881. So 487.81. So what is the total units after dividend?
10,487.81.
Total units after dividend is going to be 10,000 plus 487.81. So we have 10,487.81 units. I mean, this is the number of units as on 1/4/2008. So 1st April 2008, we have these units available with us. Now, going ahead, we'll say as on 31st March 2009. As on 31st March 2009. So as on 31st March 2009, guys, again, we need to look at what is the amount of dividend that will be given to us, right?
Yes, sir. It's a 20%.
So what will be the amount of dividend? It will be 10,487.81 multiplied by 10,487.81 multiplied by rupees 10 as the face value. And there we have a 20% dividend. So if you have a 20% dividend, if you're having 20% dividend, then what is the amount of dividend, guys? 10,487.81 into 10 and 20%.
20,009
20,000.
975.62.
Yes, 975.62. This is the amount of dividend which we have. 20,975.62. That's the amount of dividend. Then what will be the NAV of that? So for that, we have seen that the units which are there as on 31st March 2010 is 11,296. And this is the number of units that you have after payment of this dividend, because after this dividend, there is no dividend payout. So whatever units that we have over here, that will be result of this final dividend.
That is a opening unit.
Yes, that's the differential part it's going to be. So we can say number of units on 31st March 2009. You know, it is 10,487.81. And the number of units on 31st March 2010. This is 11,296. 11,296.11. So can I say the difference between these two is simply going to be the
Dividend.
So this is simply the number of units allotted as dividend. This is simply the number of units allotted as dividend. Right, so this is the number of units allotted as dividend on 1/4/2009. So what is the differential?
808.3.
808.3. This is the number of units that have been allotted. Now we know that amount of dividend is 20,975. Number of units that are allotted as dividend is 808.3. So can we get the NAV as on 31st March 2009? That can is 20,975.62 divided by 808.3. 20,972.62 divided by 808.3. So what is the NAV as on 31st March 2009, guys?
25.95.
Yes, that is 25.95. Done. So NAV as on 31st March 2009, it is 25.95. Okay. Clear, guys?
Yes.
Okay. Then Now, this is 31st March 2009. Then coming to 31st March 2010, units is 11,296. You want to know the NAV, and that time the annualized yield is 73.52. So now, as on 31st March 2010, we have been given the annualized yield. So annualized yield is going to be
7.52.
NAV, or not NAV, we'll just say maturity value, because we have sold it, right? Maturity value minus investment value. We have not received any dividend in form of cash. So we can simply say it's maturity value minus investment value upon investment value. Into 12 by, for how many months have we invested over here? From 1st July 2007 till 31st March 2010. What's the number of months?
9, 12, 12.
Yeah.
24 plus 9
So 33.
is 33.
33. So what is the annualized yield? Annualized yield is given as what? 73.52. 73.52% is maturity value. Now, we don't know what is the maturity value. So let me take it as X. Investment value was 1 lakh. Upon 1 lakh into 12 by 33. So can you just solve it and give me the value of X? What's the value of X, guys? Just solve it and give me the value of X over here. Solve it and give me the value of X.
It comes to
302,180. 3 lakh
How much?
2,180.
How much?
3 lakh 2,180.
3,02,180.
Yes, sir. 2 lakh 180 plus 1,000. 1 lakh. Yeah.
Yeah, so 3,02,180. That's the X value. So we can definitely say that our NAV is going to be 3,02,180 divided by closing number of units. Closing number of units was given in the question as 11,296.11. Okay, so 3,02,180 divided by 11,296.11. So how much is the NAV number? 26.75. Correct guess?
Yes, sir. 26.10.
26.75. Everyone?
Yes, sir.
yes.
Okay, perfect.
Sir, I have a doubt, sir.
Mm-hmm. Go
In 2008 to 2009, we have
Mhm.
taken an NAV value of 2,010. So there may be a dividend between 8 to 9 now.
There may be a dividend from
8 to 9.
so
From
that
30.
dividend is considered. That dividend is given to us from 2 to 2008 to 9, right?
Yes, sir.
So in this time period, there's a dividend declared at 20%.
I think we have calculated it.
Yes,
20,009.
we have calculated that. As on for the year ended 31st March 2009, you have a dividend of 20%. That is already considered.
No, sir. Sir, for units, a dividend considered in units, we can take as like we have taken a annualized return in last. We have annualized return also. No?
So where is the annualized return given for 2009? They have not given the annualized return. They just stated the dividend is 20%. So this 2009, it actually acts like a balancing figure.
Okay, sir.
Okay. Fine.
I think, I think he's 2008. There is a 153.35. I think he considered that. I think so. I'm not sure on what basis his question is.
No. That's okay. So next, let us go for question number. Yeah, question number 15, guys. A mutual fund having 300 units has shown its NAV as 8.75 and 9.45 at the start and at the beginning. Okay, so the mutual fund is having 300 units with NAV of 8.75 and 9.45 at the beginning and at the end of the year. The mutual fund has given two options: pay 0.75 per unit as dividend and 0.6 per unit as capital gain, or these distributions are to be reinvested at an average NAV of 8.65. What difference would it make in terms of return available, and which option is preferable? Okay, so here we need to decide about which option is going to be preferable. So we will obviously look at what will be our annualized yield if the dividend and the capital gain distributions are accepted. And secondly, what is going to be the return if we are going to get it reinvested. So in first case, in case number 1, guys, where we are going for distributions as cash. So distributions are going to be received as cash. So the distributions are going to be received as cash. We can say NAV at the start. How much was the NAV at the start, guys?
9.45.
It's 8.75.
8.75.
8.75.
Yes, sir.
Yeah. Something wrong with the camera. Okay, let me just come back to it later. Yeah, so NAV at the start is 8.75. And what's the NAV at the end?
It's
9.45.
Yes.
9.45.
So NAV at the start is 8.75, NAV at the end is 9.45. So, and the distributions that we have is 0.75 and 0.6. So here, if you're looking at calculating annualized yield, it's going to be NAV at the end minus NAV at the start plus dividend upon NAV at the end. This is supposed to be equal to what? This is 9.45 minus 8.75 plus dividend and distributions of 0.75 and 0.6 upon 8.75. So how much is this number, guys? How much is this number? 9.45 minus 8.75 plus 0.75 plus 0.6 divided by 8.75.
23.43%.
Sorry?
23.43%.
23.43%.
Yeah, 23.43.
Okay, so 23.43%. And then second case, where the distributions are done by way of units. So if distributions are done by way of units, so distributions as units, this is going to be NAV at the end is of course 8.75. NAV at the start is 9.45. But when we have distributions as the number of units, I can't be comparing the NAVs. I need to compare the total number of total amount of investment. So NAV at the start was 8.75. This simply implies value of investment at start. Value of investments at start is going to be 8.75 into 300 units. So value at the start of the year is 2625. Now, of course, value of investment at the end of the year, I can't multiply it with 300 because I need to look at what is the number of units allotted. So number of units allotted will be number of units allotted as distributions. What will be the number of units allotted as distributions, guys?
It's the dividend and appreciation 1.35 into
That is
300.
0.75 plus 0.6 into
300 divided by 8.65.
Yes, because distributions are done by way of units and each unit is valued at 8.65 for distributions.
It's coming 46.82.
This is 46.82. The number of units allotted as distributions is 46.82. Now, if this is 46.82, number of units which are allotted as distributions, if that's 46.82, then so when we have the number of units allotted as 46.82, can you tell me what will be the closing number of units?
346.82.
Closing number of units will be 300 plus 46.82, which is 346.82. So closing number of units is 346.82. Now we can get definitely value of investment at the end of the year. Value of investment at the end. It is 346.82 multiplied by 9.45.
9.45.
Yes. So what's the value of investment at the end?
3277.45.
Yeah.
How much? 32?
3277.4 49.
0.46. Okay. So what's the annualized yield then?
24.86.
Annualized yield will be, sir, 3277.46, which is the value at the end, minus 2625 divided by 2625.
Yeah, 24.86%.
How much is this? 20?
4.86.
24.86.
Yes, 24.86 percentage. So that's 24.86%, guys. The annualized yield is 24.86%. So which option is preferable? Should you go for
Second one.
distributions by cash method, or should we be going it as by way of units?
By way of
Reinvestment.
units.
Reinvestment, because you're getting a slightly higher yield in that case. Correct, guys?
Yes.
Okay. Let's go for another question. Question number 17, guys. Question 17. Just try to go through it easily. Just try to read it once, guys. Then I'll take up the discussion further. Okay. So here we have a mutual fund named as Sun Moon Mutual Fund, sponsored open-ended equity-oriented scheme, Chanakya Opportunity Fund. Now, what are these open-ended and equity-oriented schemes, guys? As the name says, equity-oriented means what? What do you mean
So
by
these
equity
are the
oriented
mutual
scheme?
fund combined with the equity
Mhm.
shares.
Invested in equity shares.
Equity
Yes,
shares.
majority of the investment is going to be into the equity shares. And what do we mean by the term open-ended, guys?
It can be transacted during the period. It can be
Open-ended
bought and
means the
sold.
investor can buy the units of mutual fund and sell the units of mutual fund directly to the mutual fund itself. So you can go to the mutual fund and ask for new units, or it can go to the mutual fund and give the units back and get cash against it. So all those things are possible in case of open-ended fund. If it's a closed-ended, you can't return your shares or you can't return your units back to the mutual fund. Rather, you'll have to sell them in the market because they will be listed in the market. So open-ended, the mutual fund is going to buy and sell from you. Whereas in case of closed-ended, if you want to buy additional units or liquidate your units, you'll have to go to the market. Clear, guys? Make sense?
Yes.
Yeah. Okay. So there were three plans named as dividend reinvestment. Second is a bonus plan, and third is a growth plan. So in case of dividend reinvestment plan, the company is declaring dividend, the mutual fund is declaring dividend at regular intervals. But these dividends are not paid out to you in the form of cash. Rather, they are paid out to you in the form of additional units because it's a dividend reinvestment plan. So you will be given additional units every time. Every time the company declares, the mutual fund declares a dividend, you're going to get, dividend units, and your number of units will keep on accumulating. Okay. Then the second plan is bonus plan. So in this bonus plan, the mutual fund is not going to declare any dividend, but it's going to declare bonus at regular interval. And bonus will be given to you in the form of additional units. Those units are also going to get accumulated into your account. And the last one is a growth plan in which you don't get any dividend or any bonus. Right? In case of this, you don't get any dividend or any bonus. Rather, what you get, you don't get any bonus or dividend. Rather, what you get is, the direct final redemption value will be paid out to you. So no dividend, no bonus in between. Your NAV value will keep on increasing. So here,
It's a,
yeah.
a
Sorry.
reinvestment plan. Reinvestment on last one. It's option C.
It's reinvested, but no units are given to you.
Okay.
The money, whatever the mutual fund is earning, it's just keeping it with itself. Right. So at the time of initial public offer, rather it should be the new fund offer, NFO. Mr. Anand Bachchan and Charu, three investors invested in Plan B, C, and A. Okay. And the history of the fund is given. Then on 31st of July, that's on this date, all three investors redeemed all balance units. So they redeemed all the units. So you have to calculate the annual rate of return to each of the investors. We want to know what is the annualized rate of return earned by each of the investors with certain assumptions. The assumptions are like, first, long-term capital gain are exempt. Second assumption is short-term capital gain is going to be 10% of income tax. Securities transaction is 0.2%, but that's applicable only at the time of sale or redemption of units, and no education cess is applicable. So we have to evaluate out of these three plans, which plan has provided a higher rate of return. Okay, which plan has provided a higher rate of return? That's what we are supposed to be calculating. So let us first talk of the plan A, which Ms. Charu has invested. So let's go for evaluating this plan, which is evaluation of plan A, dividend reinvestment plan. So evaluation, this is question number
17.
Question number 17, guys, right? Okay, so I'll just need this data. Evaluation of plan A, which is the dividend reinvestment plan. So evaluation of plan A, which is dividend reinvestment plan. Evaluation of plan A, which is a dividend reinvestment plan. Now, every time the dividend is paid, we need to look at what is the number of units that are allotted to us. So what we do is we start with considering the date, NAV as on that date. Then we talk of opening units. Right? Then we consider the dividend percentage given to us. Then we're going to look out at the amount of dividend. Okay. Then dividend units. And then finally we say the closing units. Okay. So we started with 1,499. NAV is 10, right? And opening unit was nothing, and everything you got it as by way of closing units, guys. Then the first time you received dividend was on 28th of July. So you're receiving dividend on 28th of July 2003, when the NAV as on that date was 30.7. We had like 10,000 units. Dividend percentage is 20%. So can you tell me what will be the amount of dividend, guys? What will be the amount of dividend? It's going to be 20% of the opening number of units.
61,400.
61,400 open.
10,000 units.
Into 10 face value. Into 20%.
61,400.
61,400. What are you saying, guys? Guys, the amount of dividend will be a percentage of the face value.
20,000. 20,000.
It's a 20%. It's 1,000 into face value into 20%.
Face value is the initial NAV that we have. This is 10. So 10,000 into 10 into 20%. That's the amount of dividend, which is 20,000. Right? Then what will be the amount of, what will be the number of dividend units? The units that have been allotted to you, units will be allotted to you at a NAV value.
Yeah,
right?
651.47.
651.47. 651.47. Okay. So what will be the closing number of units that we have?
10,651.47.
10,651.47. Okay. That's the closing number of units, which is 10,651. March 2004. That time the NAV was 70. The opening NAV will be 10,651.47. Dividend is 70%. So what will be the amount of dividends? 10,651.47 into 70 being the NAV. Will be multiplying 70? Of course not. Into 10 into 70%. Sorry, the NAV is different over there. NAV is
13 points.
Yeah. So 10,651.47 into 10. That's the face value. On that we have 70%. which is 74,560 as the amount of dividend.
This is for
70.
whole year. We have to compute that how many number of months is there, no?
No, we
Days.
don't want to calculate the annualized yield, right? There is no annualized yield. You do that number of months and all in case of annualized yield. Here we just want to calculate the amount of dividend. So amount of dividend will be what? 70% of the face value.
Okay, that's fine, sir. From 28/7/2023 to 31st March 2024, that is a period.
Hmm. So what you
We
mean to say? This 70% will be adjusted for the number of months?
Yes.
No. Dividend is just a percentage. It's never adjusted for time period. Dividend is just a percentage of your face value. This is not the rate of return or yield.
Whole year.
Yes. So there is no concept of whole year or half year in case of dividend. When the company declares a dividend, it's the straightforward amount, the percentage multiplied by face value.
Okay.
When you want to calculate the annualized yield or the rate of return or the IRR, that time you think of the time period.
Right, sir. My conceptual clarity is not correct then.
No, we are not.
Right.
We are not calculating the annualized yield. In the previous questions, we were calculating annualized yield. So every time a company declares a dividend, like for example, a company declared dividend in year 0, and then it didn't declare anything for 5 years. And then again, at last it declared a dividend in the 5th year as 100%. So you can't be saying that 100% into 5, make it into 5. You can't be doing that.
Okay, got it, sir. Whenever the dividend is declared, the
It's just a
declared for
face value. Percentage of
yeah.
face value, that's it.
Okay, fine. Got it now. Thank you, sir.
Yeah. So we got the amount of dividend. Now, what will be the number of dividend units? How do we calculate the number of dividend units, guys?
1277, sir.
Sorry?
1277.
1277. That's the number of, no, keep it in decimals also.
1276.28.
0.9987.
Like 74560.29 divided by
Divided by 58.42.
58.42.
It's 0.99.
1276.28.
28.
1276.28. So what will be the closing number of units? Just add both of them. 10651.47 plus
1927.75.
1276.28, which is 11927.75. 11927.75. Okay,
Right, sir.
11927.75. That's your closing units. Then similarly, we have to calculate the number of units as on 31st of October 2007 when the dividend is declared. Then similarly on 15th of March 2008 when the dividend is declared. Then after 15, then we have 24th of March 2009 when the dividend is declared. So here, I want you to calculate these 3 years and then just give me these closing units. Because all my calculations are going to be based on these units. So I'll need, in fact, I'll need not only that, I'll need this entire set of units. Dividend units and also the closing units, these 6 numbers. Can you calculate these 6 numbers, guys?
Yes, sir.
Yeah, so just wait. Complete this table quickly, guys.
Yes.
Okay, done.
Yes.
Okay. So, what are the dividend numbers?
The dividend numbers are from 31st October 2007, 1131.13,
1131.13. Then
702.85,
702.85. Then
1144.43,
how much?
1144.43,
1144.43. Then closing number of units.
It comes to 13,058.88. First one.
13,058.88.
88.
Then
13,761.73.
61.73. Then
14,906.16.
14,906.16.
6.
So now the redemption is happening on 31st of July 2009. So on 31st of July 2009, we're talking of what will be the redemption value of units. So redemption value of units will be 14,906.16 into 53.75. So 14,906.16 into 53.75. How much is it? $14,906.16 into 53.75.
8,01,206.1.
8,01,000.
206.1.
206. Then we can't be taking this entire money, right? Because I need to pay certain taxes on it. So what are the taxes that I'm going to pay? First up, short-term capital gain is applicable and securities transaction tax is applicable. So from this, we will reduce the short-term capital gain tax. So this is going to be less short-term capital gain. Sorry, I need to first reduce the securities transaction tax at 0.2%. So securities transaction tax at 0.2%. How much is it? 801206 into 0.2%.
It's a 16,024.12.
1,602.41.
1,602.41.
41.
1,602.41, yes. Okay, that's your securities transaction tax. Then from this, obviously this will be subtracted and this is going to be our net amount received. This is the net amount received on redemption. But again, this money which I have received after reduction of the STT, I won't be able to take this money entirely with me. 7,99,602 point something, right? Or what is it?
0.69.
2.69.
3.69.
603.69. Okay.
59.
Okay, just ignore the decimals. That's your net amount which I have received. But this is not something which I can say that this is my net redemption value. Because for the net redemption value, I need to also pay the short-term capital gain tax. So less STCG, short-term capital gain tax. Right, the short-term capital gain tax is going to be at the rate of 10%. So 10% is going to be short-term capital gain. Now, short-term capital gain is something, that I have to pay for the units which I have got a year before. I mean, within a year. So since we are redeeming on 31st of July 2009, any unit that we would have received from 31st of July 2008 till now, on that units only we are going to pay the short-term capital gain tax. So how many units have we received in this time frame? 31st of July 2009 and 31st of July 2008. Can I say it is this units? 1144.
1144.
So this is going to be 1144.43 units into 1144.43 units into what is the redemption value? Redemption value is what? 53.75. But this is not my net redemption value. Or rather, I'll do one thing. Wait. I'll do the calculation which we as charters understand. Full value of consideration. Full value of consideration will be can I say it is what is the value at which we are redeeming? 53.75
53.75.
multiplied by the units which we have 1144.43.
0.43.
So full value of consideration is how much? 53.75 into 1144.43, which is 61513.11. Okay.
Yes.
61513.11. That's the full value of consideration. From that, we'll have to reduce
Cost of
security
acquisition.
transaction cost, security transaction tax, which is at the rate of 0.2%. So 61513.11 into 0.2%, which is 123.03.
Yes.
Right? And then further, we also have to subtract the the cost of acquisition. So what's going to be your cost of acquisition? Because the units that we have received, which is 1144.43, these units were allotted to us at a cost of 48.10, right guys? When the NAV was 48.10,
Yes.
the units were allotted to us 48.10. So cost of acquisition is going to be what? 1144.43 into what's the cost of
48.1.
acquisition? 48.1.
55,047.08.
55,047.
Yeah.
0.08.
0.08.
Okay. So when we subtract all of that, that will be our short-term capital gain. So what's the short-term capital gain?
6,343.
6,343. So what will be the short-term capital gain tax? 634.3. This is going to be subtracted. And then we have the net redemption value. Okay. So after subtracting that, what's the net redemption value we have?
5,708.70.
6,000?
5,708.70.
5,000.
6343 minus 10%.
What are you doing 6343? Why should you subtract from this? This is the tax that you're going to pay from these redemption proceeds.
Yes.
So from these redemption proceeds, we are paying 634.3. So what is the net redemption value left?
799,602.
799,602 or 603.69 minus 634.3.
34.3. 798,969.39.
798,000.
969.
968.39.
969.39.
969.39. 7,98,969.39.
Yes.
Okay, done,
Yes.
everyone. Now, so how do we get the annual rate of return now? Annual rate of return is going to be what? The closing value, which is 7,98,969.39, minus the original investment of 1 lakh
1 lakh.
upon the original investment of 1 lakh in 200. Now here we need to adjust the time period. What is the time period by which we have earned this entire investment? Because we started with what? 1,499 and we are redeeming on 31st of July 2009. So what's the total number of months? From 1st April 99 till 31st of July 2009. What's the total number of months?
Ten years, 3 months.
10 years?
3 months.
3 months or 4 months? It is
Yes, sir.
31st
4
of July,
months.
right? April, May, June, July.
4 months.
So 10 years, 3 months means what? It is 124 months, right?
4 months. 10
124
years, 4
months.
months.
Yes, sir. 124 months, sir.
So into 12 by 124, you can get the annual rate of return. So what's the annual rate of return, guys?
Is 67.64%.
67.64 percentage.
Okay, 67.64%. That's the rate of return which you're getting in the first plan. Okay, then we have to look for the next plan, which is plan B, which is the bonus plan. So evaluation of plan B, which is the bonus plan. Okay, so here we have date, NAV, bonus ratio. Okay, so we have NAV, bonus ratio. Then we can think of opening units. Okay, and then we'll calculate the bonus units and then closing units. Okay, by the way, over here, the bonus units does not depend on your NAV. So you start with 1,499 and the NAV was 10. Bonus ratio is not applicable, right? We didn't have any opening units. There was no bonus unit, but definitely we had invested 10,000 units. Then we had a bonus on 31st of March 2004. What's the NAV at that time is? So here we have a bonus plan. The NAV at that time is 31.05. But this NAV is actually of no use for us because the bonus is not allotted to us based on the number, based on the NAV, but it's just going to be allotted to you based on the bonus ratio. So we have a bonus ratio of 5:4. Opening units is 10,000. So when we say 5:4, it simply means 5 units for every 4 units. So when you say bonus
12,000
ratio 5:4, 10,000 units are there.
12,500.
So bonus units are going to be what? 12,000?
500.
500. So what will be the closing units after this?
22,500.
22,500. Okay. Then next is 31st of March. When is the next bonus given?
2008.
2008. NAV at that time is
20.05.
20.05 and bonus ratio is 1:3. So 20.05, bonus ratio is 1:3. Opening units is 22,500. What will be the bonus ratio, guys? I mean, bonus unit, sorry. One is to three means one unit for every 3 units.
7,500.
7,500. So this is going to be 30,000.
Yes.
Then when was the next bonus given to us? 24th of March 2009. And NAV at that time is 19.95.
19.95.
And the bonus ratio is what? 1:4.
4.
Opening you had 30,000 units. What will be the bonus unit?
7,500.
7,500. The total units is 37,500.
500.
Right. Again, I need to calculate the annual rate of return using the same fundamental. So as on 31st of March 2007, I need to compute this same calculations, but the numbers are going to be definitely different, guys. Right, but I want you to just calculate this part. So we have redemption value of units to be calculated. From that, STT needs to be deducted. Then you get the net redemption value. Then again, the full value of consideration, cost of acquisition, STCG, all this calculation needs to be done, arriving at the net redemption value. And then finally, the annual rate of return needs to be computed. Can you do this calculation, guys?
Yes.
Yeah.
Yes, sir.
Okay. Just remember cost of acquisition. Since it's a short-term capital gain, anything, we are redeeming it on 31st of July 2009. So these units which you have received, 7,500 units, on this we have to pay short-term capital gain tax. And for that, you can take the cost as 19.95. Alternatively, you can assume the NAV, cost to be 0 since it's a bonus. But right now, for all of us standardization, let us take the cost to be 19.95. So cost of acquisition will be the NAV value. Okay. Is it clear?
Yes.
Yeah. So right now, just take the cost to be 19.95 and then compute the annual rate of return from this, guys.
Yes. Yes.
Yes. So what's the annual rate of return?
71.39%.
71.39.
Yes.
Okay. Redemption value of units, gross redemption value. Tell me what is the gross redemption value?
Redemption value is after deducting STT 8,60,026.50. 860026.50.
No. Gross redemption. That should be
8,61,750.
750. And then on that you pay a STT of 0.2%.
1,723.5.
861,750 into 0.2%, which is 1723.5.
Yes.
So we are left with what?
860026.50.
86,002.5.
6.50.
Then what is the STCG tax?
7,500. It is
No.
total taxes. STCG taxes.
STCG tax.
837,646.2.
Anyways, full value of consideration I need to calculate, which will be
83,764.62.
No. Some issue. What's the redemption value of this as on this is 22.98. So full value of consideration is 22.98 into 7,500 units.
1,72,350.
7,500 into 22.98. That's 1 lakh
72,350. 1,72,350.
1 lakh 72
350.
350.
Yes.
Okay. Then the full value of consideration is 1 lakh 72,350. On that you're going to pay STT of 0.2%.
344.70.
344.7. And then cost of acquisition is going to be
7,500 into 19.95.
19.95 into 7,500.
1,49,625.
19.95 into 7,500. 1,49,625. So after
625.
subtracting these things, what is the STCG left? 172,350 minus 344.7 minus 149,625. 22,380.3, and the tax is 2238.
22,380.30.
38.03. So after subtracting this, what's the net redemption value?
8,37,646.20.
8 lakh
36,000.
30. 8 lakh 57,000.
37. 8,37,646.
How come 37? 8 lakh 60 minus 2,238.
Okay, I'm deducting STCG. I have to deduct 10% of it. Right.
86,026.5 minus 2238.03.
86,026.
This is 8 lakh 57.
It's 8,57,788.47.
So 8,57,788.47 minus 1 lakh. Divided by 1 lakh into 12 by 124. Which is 73.33%.
Yes.
Okay, that's the annualized rate of return in second plan. Got it, everyone? Okay. Now one more plan is left, which is the growth plan. So evaluation of plan C, which is a growth plan. Evaluation of plan C. Is a growth plan. So there we look at the redemption value, because there's no dividend reinvestment or bonus, units allotted to you. Whatever units you had received earlier, those units are only going to get redeemed. So that's like 10,000 into 82.07, which is 8 lakh to 20,700. Less, there will be only STT, right? There won't be any short-term capital gain, right? And then you calculate the annualized rate of return. So STT at the rate of 0.2%. So how much is a 0.2%? 8,20,700 into 0.2%.
1,641.4.
1,641.4. So 820,700 minus 1,641.4, which is 8,19,058.6.
Yes.
And so annualized rate is going to be 8,19,058.6 minus 1 lakh upon 1 lakh into 124, sorry, into 12 by 124 into
12 by
100.
1.
How much is this return?
69.59.
Okay, 69.59%.
59.
So which is a better plan? Growth plan or bonus or dividend reinvestment?
Why is there no
Bonus is the best one, right?
why is
Because
there
that's
no
giving us
capital gains tax?
73.33%.
Yes, sir. Bonus is best, sir. Is getting the 73.31%.
Yes. Bonus plan is best because it's giving you 73.3133%. Okay.
Why is there no STCG on this plan?
Sorry.
Why is there no STCG tax on this plan?
No, because no dividend has been received to you earlier, right? I mean, within a year. In fact, there is no additional units given to you. Whatever units you had purchased initially, only that is getting redeemed after 10 years.
Okay, yes.
So there's no short-term capital gain tax.
Yeah, right.
Right? Okay.
But will come under the long-term capital gain, sir. Like, since the long-term capital gain is zero, not taxed, hence we are not considered, right?
Yes. Long-term capital gain is exempt over here, so we are not
Yeah,
exempt.
yeah, exempt on this particular question. So, yeah, hence we are not considering that tax.
Correct.
Okay, sir, right. But this question, if they ask it in the exam, it will be around took half an hour time, sir.
Around approx half an hour you should take, because anyway, this is okay.
I'm talking about all the three plans.
It will be a long question, right? I mean, even the marks will be higher for this. So the marks are going to be higher, so we did not be really skeptical about what's really going to happen. Okay, so yeah, now I've done a very heavy question. Let's go for Taking up a lighter question now. Correct, guys?
Yes, sir. Today we solved all questions are good question.
Okay, try this question number 20, guys. You should be able to do it because we just have to calculate the NAV. So we just need to take the current market price of all the assets, subtract all the liabilities, and then divide by number of units to get the NAV. Try out this question 20, guys. Are we done, guys? Okay, let me start. So what are the assets that the mutual fund is having? What are the assets which the mutual fund is having, guys?
One is listed shares.
Listed shares, which is equity shares. Then you have
Cash in hand.
cash, you have bonds, right? Let me write it down. So we have equity shares, then we have cash balance,
And debentures.
we have bonds, which are listed and unlisted. Then we have other fixed interest securities. Have other fixed interest securities. Then dividend receivable. So that will be your total assets.
Yes, sir.
And in the form of liabilities, we have amount payable on shares,
Yes, sir. Expenditure accrued.
expenditure accrued, which is the expenditure has been done, we have not yet paid. Or you can also call it as expenditure outstanding. Right. That will give us the net asset. Then we divide it by number of units, which will give us NAV. Correct? So equity shares, cash, bond, other fixed interest securities, dividend receivable. Let's get the values. What is the value of the equity shares? So equity shares are having a cost of 20. But when we purchased, the index was 1000. Now the index has become 2300. So how do we get the current value of the equity shares?
20 into 1000, 2300 divided by 1000.
So this is going to be 20 divided by 1000 into 2300, which is 46 crores. What is the cash balance left with us? 1.23. Then bonds and debentures at cost 4.3, but they said that out of these bonds, not listed and quoted is 1. Not listed and quoted is 1, but how do we value them? For that, they have given over here there has been a diminution of 20% in unlisted bonds and debentures. So these unlisted bonds and debentures have reduced their value by 80%, reduced the value by 20%. So unlisted is going to be like 1 crore into 80%. So 0.8 crores is the value of unlisted. What about the listed?
Listed NAV is 8.
Value of listed bonds and debentures at NAV is 8. So you can definitely take listed to be 8. Right, so everything is anyways by way of crores only. Then other fixed interest securities, the other fixed interest securities values also are at cost. So if it is at cost means 4.5 crores. Then how much is the dividend receivable? 0.8.
0.8.
So total assets works out to be how much?
61.4.
61.4. Okay. No, it should not be 61.4. There is something 1.23. It's 61.33. Then what is the amount payable on shares? Amount payable on shares was 6.32, and outstanding expenditure is
0.75.
outstanding expenditure accrued is 0.75. So net assets will work out to be how much? 54.26.
26.
And the number of units was 0.2 crores. So NAV is 271.3. Number of units, since it was 20 lakhs, I wrote it as 0.2 crores. Okay. Done, everyone?
Yes.
Okay. So that was this question 20. Now, let's go for question number 19, guys. You should be able to get it. Try out question 19, guys. You have to calculate NAV over here, but after the fund has issued new units and acquired some shares, all the calculations are done. Will you be able to do it? Question 19, guys. You have to first get the cash balances. A mutual fund made an issue of 10 lakh units of 10 each on January 1, 2008. No entry load was charged, and it made the following investments. So there wasn't any entry load, and the investments were made as this. During the year, so you can see 10 lakh units were issued at a price of 10 each. So total collection would be like, 1 crore, out of which 98 lakh it spent in acquiring these four assets. So how much is the cash balance left? What is the value of cash balance left? Yeah. How much will be the cash balance left, guys? You can see 10 lakh units into 10. So 1 crore is the total money collected, out of which 98 lakh is spent in acquiring the asset. 2 lakh is left as cash balance. In that, obviously, cash balance, you have all these adjustments wherein you receive the dividend of 12 lakh. Interest on all types of debt securities was received as and when due, and at the end of the year, equity shares are valued at 175% and debentures are valued at 90%. And other investments are going to be valued at par. You have to find out the NAV per unit, given that the operating expenses paid during the year amounted to 5 lakh. And also you have to find out the NAV if the mutual fund had distributed a dividend of 0.8 during the year to the unit holders. So this is going to be a separate case. So let's try to solve the first case. Okay. So let us first talk of opening cash balance. So we had an opening cash balance of 2 lakh. Right. So we had an opening cash balance of 2 lakh. To that, we are going to add dividend which we have received. So how much dividend are we going to receive? Dividend is 12 lakh, which is received by us. Interest on all types of debt securities was received as and when due. So I need to add interest on government securities, interest on debentures of both listed and unlisted categories. So add interest received. So we would have received interest 8 lakh into 7%. Right, plus 5 lakh into 9%, plus 5 lakh into 10%. So this is going to be 8 lakh into 7%, which is 56,000 plus 45,000, and this will be 550,000. So 56,000 plus 45,000 plus 50,000. This is 1,51,000. So interest that you received is 1,51,000. From that, you have also paid operating expense of 5 lakh. So less operating expense of 5 lakh. So operating expense of 5 lakh was also paid out. And then we have the closing cash balance. When we subtract it, the closing cash balance is 2 lakh plus 12 lakh, 14 plus 1 lakh 51,000 minus 5 lakh, which is 10 lakh 51,000. Then we can go ahead with the calculation of NAV. So cash balance is 10 lakh 51,000. We need to add to it value of equity shares. So equity shares is going to be 50,000 into 175, which is 87 lakh 50,000. Then to that we are going to add 7% government securities. 7% government securities are valued at, we'll keep it at the face value, whatever is the purchase value, there's no change in it. Then debentures, 9% debentures. Since they're unlisted, we'll keep it at their cost, unlisted debentures. So 9% unlisted debentures is 5 lakh. And we have what? 10% debentures. These are valued, 10% listed debentures are going to be valued at 90% of the face value. So when you say 90% of face value, it's going to be 4 lakh 50,000. Okay. And then after 10% debentures, then we have the equity shares. Equity shares are going to be what value? So 80 lakh is the value of equity share, but they're valued at 175%. So
Equity shares is done already.
oh, sorry, yeah, 87 lakh it is done. So we have added all of that. We just take a total assets. 10 lakh 51,000 plus 87 lakh 50,000 plus 8 lakhs plus 5 lakh plus 4 lakh 50,000, which is what? 1 crore 15 lakh 51,000. So number of units was 10 lakhs. So what is going to be the NAV per unit? 11.551. Correct, guys? NAV is 11.551. Right? Yes or no?
Yes.
11.551. Okay. Now the question says in the second part, if the mutual fund would have paid a dividend of 0.8, then what would be the NAV? So if we talk of what is the amount of dividend distribution would be 0.8 into 10 lakh. So that would have been like 8 lakh. So what would be the total assets after distribution? So out of 1 crore 15 lakh 51,000, if you would have paid out 8 lakh as dividend, then the value is going to be 10 lakh. Sorry, 1 crore 7 lakh 51,000. So total assets after distribution will be 1 crore 7 lakh 51,000. And then the NAV per unit would have been, of course, 10.751. NAV per unit would have been 10.751.
Yes.
Correct, guys?
Yes.
Yeah. Okay. So these are the NAV per unit. Operating expenses are paid. This is done. So question number 19 is done, guys. Okay. Then okay, let's do this question 22 now, guys, which is based on portfolio evaluation. Question 22. In portfolio management, do you remember we have learned something called a Sharpe ratio, Trainer ratio? Yes or no?
Yes. Yes.
So can you tell me what was Sharpe ratio? What was Sharpe ratio? Sharpe ratio was basically return of your portfolio minus risk-free divided by standard deviation, right? And what was the Trainer ratio? Trainer ratio is return of portfolio minus risk-free upon beta. Return of portfolio minus risk-free upon beta. Correct, guys?
Yes, sir.
Yes.
Sharpe ratio is return of portfolio minus risk-free upon standard deviation. Trainer ratio is return of portfolio minus risk-free upon beta. Correct? Right? Okay. So now we have two mutual funds, one named as D mutual fund, another named as K mutual fund, each having a closed-ended equity scheme. NAV as on 31st of December 2014 of equity schemes D mutual fund is 70.71, which consists of 99% equity and remaining cash balance. So this D mutual fund is having investment as what? D and K. So we can say the weight of equity, amount of equity that we have is 99%, and the cash that we have, which is weight of cash, is 1%. Whereas K mutual fund is having 62.5 as the NAV, but it has got 96% equity and 4% cash. So 96% equity and 4% cash. And the NAV that we have, value for D and K, NAV is 70.71 and 62.5. 72.7, 71 and 62.5. That's your NAV. Also, we have the information regarding the Sharpe ratio, Trainer ratio, and standard deviation. So first, let's talk of the Sharpe ratio. Okay, and there is, the other part is also given. First, we'll talk of the Sharpe ratio and then everything. We have the standard deviation numbers. So D and K are having a standard deviation of 11.5 and 5. 11.25 and 5, okay.
11.2, sir.
11.25 and 5. Okay. And the Sharpe ratio for D and K, Sharpe ratio is
2 and 3.3.
and 3.3. Right. Now we know that Sharpe ratio is essentially arrived at. How is this Sharpe ratio arrived at, guys? For D, can I say Sharpe ratio of 2 would be return of our portfolio, or I'll call it as return of D minus risk-free upon standard deviation. So this is actually 2 equal to return of D minus risk-free, right? Return of D upon risk-free divided by standard deviation is 11.25. So we can get the return of portfolio D minus risk-free equal to what? 11.25 into 2, which is 22.5. So return of D minus risk-free should be equal to 22.5. And for K, what is the Sharpe ratio?
3.3.
So it's return of K minus risk-free upon standard deviation. So what is the return of K? This is 3.3 is equal to return of K is not known, minus risk-free upon 3.3. We can definitely say return of K minus risk-free is what?
16.5.
No. Standard deviation is 16.5.
5.
So we got this value, right? Now we need to get the beta values. For that, we'll have to take trainer ratio. What is the trainer ratio given for D?
15.
Trainer
15
ratio.
for both.
Trainer. 15 for both. So trainer ratio is what? Return of D minus risk-free upon beta. So this is, we know, 22.5 upon beta, and trainer is 15. So can we get the beta value here now? 22.5 divided by 15. So beta is what? 1.5.
Yes, sir. 1.5.
Then over here is going to return of K minus risk-free upon beta. That's also 15. So which is 16.5 upon beta is equal to 15. So what will be this beta? 16.5 upon 15. So beta is 1.1. Right? Everyone? Yep. So now the question asks us, there is no change in the portfolio next month, and annual average cost is 3 per unit. So annual average cost is 3 per unit of the schemes. If the share market goes down by 5% within a month, calculate the expected NAV after a month for the scheme for both the mutual fund. Consider 12 months and ignore the number of days. Now, here beta is 1.5, but remember, this beta is actually the combined effect of both the things. Beta of equity into weight of equity plus beta of cash into weight of cash. That combined effect is 1.5. So the combined effect is 1.5. Beta of equity, we don't know what it is, but we know the weightage of equity is 0.99. What can I say about beta of cash? How much will be beta of cash? 0,
1.
right?
0.
0 into 0.01 is 1.5. So we can get the beta of equity for the mutual fund D as 1.5 divided by 0.99, which is equal to 1.5 divided by 0.99, 1.5152, right?
Yes, sir. 1.51.
1.5152. Okay, just a moment, guys. Yeah, guys. So beta of equity is 1.5152. So what is the change happening in the market? Market goes down by 5%, right? Right. So market falls by 5%. Equity value of D will fall by what percentage, guys? Can I say this will fall by 5% into 1.5152, right? Because our beta is 1.5152. So 1.5152 into 5%. This is going to be a fall of 7.576%, right? So what will be the new equity value of D? So we will say originally NAV was 70.71. Right? From that 70.71, 99% was equity, which has got reduced by 7.576%. So what is the new equity value? Originally it was 70.71, out of which 99% was equity, but there has been a reduction of 1 minus 7.576%. So the new value that we're going to have is 64.7. Right? So if it is 64.7, to that we will add cash balance, which is 70.71 into 1%, which is 0.7071. So the new NAV will work out to be 64.7 plus 0.7071, which is 65.41.
40.
This is a new NAV value of the mutual fund D after the change has happened in the market. Okay. Same way, can you compute the new NAV value for the mutual fund K? Yes. Can we do it, guys?
Yes, sir.
Yeah. Okay. So just do that and then take a break, guys. So we'll just take a break now, complete that part K, and then we'll discuss the next part after the break. Okay. Let's take a break, guys.
Yes.
Okay, let's do a really interesting question now, which is
Uh, 59.06 was new enemy for the second one.
for the second one, 59
Yes.
point.
06.
Perfect. 59.06, correct. Let us take up. This camera is doing some issue. Okay, so let's take up this question, guys. Question number 21. Question number 21. So on 1st April, an open-ended scheme of mutual fund had 300 lakh units outstanding with a NAV of 18.75. At the end of April, it issued 6 lakh units at opening NAV plus 2% load. So plus 2% load means, which means the entry load. So this is the entry load. Right. So 18.75 on that 2% load will be charged if you want to buy the units. Adjusted for dividend equalization. At the end of May, 3 lakh units were repurchased at opening NAV less 2% exit load, adjusted for dividend equalization. And at the end of June, 70% of its available income was distributed. 70% of available income was distributed. In respect of April to June quarter, the following additional information are available. Portfolio value appreciation is 425.47. Income of April is 22.95. Income for May is 34.425. And income for June is 45.450. You're required to calculate income available for distribution, issue price at the end of April, and repurchase price at the end of May, and NAV as on 30th June. Okay, so it's a bit technical question. Let's try to answer it bit by bit. So first, we have to calculate the income which is available for distribution. So we need to prepare a proper statement for that. Okay. So we'll have to first calculate this thing, income which is available for distribution at every time period. So let us just go ahead with that calculation. Question number 21. So first let us compute what is the income which is available for distribution. So we'll say calculation of income available for distribution. So calculation of income available for distribution. Okay. Then we say prepare this table: units, amount, and per unit value. We have the particulars. So we're saying what is the income in April? How much is the amount of income in April, guys?
22,950. 22.950 lakhs.
Let's keep it as 22.95.
Yeah.
And what is the number of units? 300?
300.
So units is 300, amount is 22.95. So what about the per unit number? 22.95
0.
divided by 300. So on this 300 units, we have an income coming in April, which is 0.0765. Right, so 0.0765. Now this income which we have on a per unit basis as 0.0765. This is the income of which unit holders? Because remember, the unit holders position, the number of units that we are having, that is fluctuating because we have like new units issued and also certain units were repurchased, right? So if you look at the pattern of movement of the units, you can see so this is like April, May, and June. We have 3 months, right? April, May, and June. Yeah. So April, May, and June. So start of April, you had 300 units. And then during April or in the month of April or at the end of April, you can say 6 lakh units were issued. So when I say 300 plus 6, it became 306 lakh units. Correct, guys?
Yes.
Yes, sir.
And then on this 306 lakh, out of this 306 lakh unit, 3 lakh units were redeemed in the month of May, right? At the end of May, 3 lakh units were repurchased. So we are left with 303 lakh units. Correct? So April and May, we have like the units coming in and units redeemed. So what is the balance left with in June? That is 303 lakh units are left. Correct?
Yes, sir.
Now my question is, when this income has been earned on a per unit basis as 0.0765, this is the income which is accruing to which unit holders? Can I say it is to be given to all 306 lakh unit holders, or is it only for 300 lakh unit holders? The income is going to accrue to which unit holders, guys?
300.
300 lakh unit holders, right? Because this was earned in the month of April, and during the month of April, these units were only outstanding.
Yes.
Right? So this income accrues to 300 lakh unit holders. But when in future, the mutual fund is going to declare dividend, in future when the mutual fund is going to declare dividend, can it say that we will give dividend only to the unit holders in April and not to the unit holders in May? We can't be doing that, right? Correct, guys?
Right. Right.
So when in future I'm going to declare dividend, I should ensure that this money goes only to whom? This money goes only to whom? Old unit holders.
Yes.
New unit holders can't be given the benefit of this. So how do I ensure that? For that, I will ask the new unit holders coming over here, the 6 lakh. I'll ask them, you pay me the NAV value. You also pay me the entry load, but you also pay me something called as dividend equalization, which is the accrued dividend sort of thing. Because you pay me dividend equalization today, later on, maybe at the end of June, when I'm going to declare a dividend, I will give you dividend. And I will give you the dividend equalization which you have paid in April and also income that you get in these 2 months. Right? For example, in April, the mutual fund has made 3 per unit. In May, the mutual fund has made 4 per unit. In June, the mutual fund has made 5 per unit. So total dividend which I will declare in June, can I say it's going to be 3 plus 4 plus 5, which is what? 12? Correct, guys?
Yes. Yes.
So now, since these unit holders, 6 lakh unit holders were not there in April, I can't be giving this 12 to them. What I will say is, new unit holders should pay me this 3 rupees and you are entitled to 4 and 5 only. Can I say the unit holders who are over here, 6 lakh, they are entitled to only these units, these dividends? Correct, guys?
No.
Yeah, which means the extra that the 6 lakhs unit holder they will receive 457.
So yes. So can I say I'll ask this 6 lakh unit holders to pay this accrued dividend right now? Whatever dividend has accrued, you pay me. So rather, I will not be charging my dividend. I mean, new unit holders a X dividend price, but I will charge them a cum dividend price. Because the units which I'm going to give you over here, they're already some amount of dividend is accrued. You need to pay dividend along with that. So you have to give it as a cum dividend price. Got it, price? So calculating
Yes.
that cum dividend price is the dividend equalization part. So now we know that income in April is 0.0765 per unit, right? And this is something which I need to charge my unit holders, right? So let us calculate over here the issue price at the end of April. We are obviously going to charge them the opening NAV because the question says that we are going to issue the units at opening NAV, which is 18.75. What other things are we going to charge our new investors? What other things are we going to charge to our new investors?
Per unit value
Entry
0.
load,
Yes. First, we will charge entry load.
then exit load is also there.
And exit load when the units are taken away then.
Yeah, taken away we got to reduce from that proceeding.
So that will happen in May. But in April, the new units are issued, right? So entry load at the rate of 2%. So 18.75 00 into 2%. 18.7500 into 2%.
0.375.
3750. But apart from that, I'm also going to charge something from that, the accrued dividend portion, which we
Yes,
call
sir.
as the dividend
Dividend equalization.
So dividend equalization is how much, guys? We got this over here.
0.0765.
0.0765. Okay. So totaling this, what's the issue price? Your total of all the three.
19.2015.
19.2015.
2015. 15.
Okay, 19.2015. Okay, this is the issue price. Now, dividend equalization is what we are going to collect. So, whatever income is available for distribution, I'll add the dividend equalization to it. So, we'll say add dividend equalization for, can I say 6 lakh units? In April, have we paid dividend equalization from, I'm talking from the point of view of mutual fund. From the point of view of mutual fund, have we paid dividend equalization or have we received the dividend equalization?
Received.
So
Received.
Can I say per unit 0.0765? So totaling to how much? 0.0765 into 6, which is 0.459.
0.459 lakhs.
0.459 lakhs, right? Correct. So now, by the end of April, how much income is available for distribution? Income available for distribution by end of April. We have 300 lakh units. Per unit, it is 0.0765. And in total, we have money of 23.409 available for distribution. Correct?
Yes, sir.
Then we received again income in May. So we will add income in May. Income in May that we are receiving, how much is the amount of income in May?
34.4.
Yes. Income in May is 34.425, right? So total income that we have is now how much? 34.425 plus 23.409, because we have not distributed anything. 23.409 plus 34.425, which is 57.834.
834.
And this is going to accrue to how many investors? 306, right?
Yes, sir. 306.
Right.
Yes.
So, and that amounts to on a per unit basis how much?
0.189.
57.834 divided by 306, which is 0.189. So on every unit, we have an accumulated dividend of 0.189.
Yes.
On every unit, we have an accumulated income of 0.189. Correct, guys?
Correct.
Yes, sir.
On every unit, we have a accumulated income of 0.189, 0.189. Now, since this is 0.189, in May, what is happening? Certain units are getting redeemed, right? So I need to get the redemption price at the end of May.
3 lakhs units is redeemed.
Okay. So 3 lakh units are redeemed. Now, since the units are getting redeemed, can I say we need to pay out the dividend equalization? Because if some unit holders are leaving their units back to us, we need to give them back the accumulated or accrued dividend.
Yes, sir. We need to pay the accrued dividend.
Yes. So what is the redemption price? So first we will take the opening NAV, which is obviously 18.75. From that, we need to reduce the exit load. Obviously, exit load, it is 2%. So at 2%, what is the exit load value?
0.375.
0.375. Also, we need to give them. So apart from just this difference, we need to give them dividend equalization. Now, how much is the dividend equalization that we are going to give? We have computed over here, right? Per unit wise, it is how much? Per unit wise, it is
0.76.
0.189, right?
189.
So dividend equalization, we have to pay 0.189. So just add up. I mean, this is going to be subtracted. Just give me the redemption value or redemption price.
18.564.
18.564. Okay. So now in May, we are going to have payment less dividend equalization paid in May. Dividend equalization paid in May. This is going to be equal to what? Per unit wise, 0.189 is paid out, right? But this is going to be on 3 lakh units. So what is the reduction that is going to happen? 0.189 into 3, which is 0.567. So what is the balance income which is left out in this? 57.834 minus 0.567, which is 57.267, and per unit wise it is of course 0.189. Got it, guys?
Yes.
Yeah.
Yes, sir.
Okay. So this is now income available for distribution by end of May.
So it would be 303 units.
303 units. Income available for distribution by end of May. So are we receiving any income in June again? Yes. Add income in June. So what is the income that is received in June?
45.45.
45.45. And that accumulates to how much? Of 57.267 plus 45.45.
102.717.
102.717.
717.
So this is on 303 units. So per unit wise, how much is this? Per unit wise, how much is
0.339.
this?
0.339.
339. Okay. And in the month of June, I think we are paying out certain amount as distribution, right? See, 70% of the available income was distributed. So from this, we are going to subtract dividend paid. Are we paying out the entire money? No, sir. 70% only. So out of 0.339 into 70%, which is 0.2373. 0.2373.
Yes, sir.
And the dividend is paid on 303 units. So amount wise, how much is being paid out? 1082.117 into 70%, which is 71.9019.
Yes.
So 71.9019. That's the dividend paid. Right?
Yes.
Right. So what is the balance left out, which can be paid at a future date?
30.8151.
30.8151, and per unit
51.
basis it is
0.339.
0.1017.
Yes, sir.
Yes.
Okay. Okay. Then we need to look at what is the cash balance, right? So we need to look at what is the cash balance that we have from at the end of June, right? So we'll say calculation of cash balance at end of June. Now for that, the question didn't give any opening balance or anything, but definitely we have some information with regards to income. So how much is the income received, guys? Income received, total income that you have received. Total income which we have received, 22.95 plus
102.825.
34.4250 plus 45.45. Right. So this is the three income that we have received. How much is the income received?
102.825.
102.825. Okay. What other things are happening with the fund which is getting impacted? The cash.
Appreciation, portfolio value appreciation.
No, portfolio appreciation is not going to impact my cash balance. When you
Yes.
are issuing units, can I see your cash balance is going to increase? You have issued 6 lakh units
Yes.
at a price of 19.2015. So how much cash is getting added because of new issue?
So 115.209.
115.209. Then less units redeemed. 3 lakh units were redeemed at a price of 18.564. So 3 lakh into 18.564. How much is this?
55.692.
55.69.
5.692. Less, we have paid dividends also, right? So the dividend that we have paid, we have computed the dividend, right? 71.9019.
71.9019.
So two of the numbers are getting subtracted and others are getting added. You can just take a total and give me the net change in cash balance. How much is the net change in the cash balance, or you can also call it as a closing cash balance, maybe?
90.4401.
19 point?
90. 4401.
4401. Okay. This is the cash balance which we have. But the question asks us to compute the NAV as on 30th June. So let us do the calculation. Calculation of NAV as on 30th June. Calculation of NAV as on 30th June. Opening value of net assets of mutual fund. So what is the opening value of net assets of mutual fund? Opening value. What is the opening value is?
300 into 18.75.
It was 300 into 18.75.
75.
5625.
5625.
300 into 18.75, which is 5625.
Yes.
To that, we need to add the change in cash balance, which is 90.4401.
Yes.
Then we will also add appreciation in portfolio value. Appreciation in portfolio value. How much is going to be the appreciation in the portfolio value?
Yeah. 425.47 lakhs.
425.47.
47.
Right. So what will be the closing value of net assets of mutual fund?
515.
6140.91.
6140.91.
91.
6140.91. Yeah.
The closing value of net assets of mutual fund is 6140.91. What is the closing number of units of mutual fund? Originally, we had what? 306 units?
303.
Sorry, 300 units. And
Original 300.
original 300. And we issued how many units, guys?
6 lakhs.
6 lakhs.
Plus 6 lakhs. And then we are going to
Minus 3 lakh.
minus 3 lakh.
Yeah,
So we are having 303
3.
units. So what is going to be the closing NAV? $6140.91 divided by 303.
20.27.
20.27.
27.
Right. So that's the closing NAV after taking into account all other factors, all other calculations. The only point in this question was with regards to the income out available for distribution. This is similar to the concept of, X interest or cum interest or X dividend and cum dividend thing that you have learned maybe at inter level. So we recover this income which has been accrued from the new investors. Now the whole idea of recovering this dividend income from the new investors is that the old investor should not be at disadvantage, right? Because when in future I'm going to declare the dividend, there should be a enough provision, which will ensure that the new investors have also paid for this dividend, which they will get as a returning back, right? So they buy the units at come dividend value, and which ultimately gets transferred to them when the mutual fund is declaring out the dividend, right? So is this question clear to everyone? Interesting?
Yes.
Yes, sir. Also, that dividend, that equalization also we need to be considered. That the excome and the day.
Yeah. So it's not something a very rocket science, but it's just similar to what we have learned as a come dividend and come interest thing.
Yes, sir. Each part we need to be very careful while doing the calculation.
Yes, yes. Okay, so with that, we are through with this mutual fund chapter, guys. So in case if you guys have any queries, I'll take it up.
There are few questions left, no? 2-3 questions.
Yeah, there are a few questions left, but similar to what we have done. So you can find the solutions done from our study material itself.
Okay.
Okay, you can take them as homework and practice it.
Right.
Okay. So the major portion, whichever, which is new to the new concept or, something where you need my hand holding, I've tried to cover all of them.
Right.
Okay.
Right, sir. Thank you, sir.
Yeah. Any queries, guys?
Not as of now.
Not as of now. You have not started studying.
Yeah, studying, but for this chapter, the remaining
For
questions.
this chapter, not. So we have done like capital budgeting is done, portfolio is done, security valuation is done, mutual funds
Yes.
is done. Right. Almost, I
Yes.
think more than 50% of the syllabus of AFM should be done as per my calculations.
Yes, almost 50%.
Yeah, almost 50% we are done. Okay. So any queries or shall we call it a day, guys? I don't know. Today my camera has taken a hit. It's not showing.
Yes, sir. Camera is not showing, but your face is on our mind, sir.
Okay, that's good. I don't know. It first made me red faced. It made me yellow faced, and then later on, I don't know. Something has happened.
Lastly, finally, it's a blinking. Blinking was appeared.
Yeah. There was some disco light on going. I don't know. Wrong with the man.
Yes, yes, sir. Like disco.
Okay, fine, guys. So with that, let's just call it a day, guys. Yeah. Thank you for giving me a patient hearing, and all the best, guys. See you soon. Bye bye. Take care.
Yeah, thank you. Thank you.
Thank you, sir. Have a wonderful day.
Thank you, guys. Thank you. Yes. Yeah. Bye bye.